is inside of the perception of inflation expectations moving into the future. We also had core retail sales this morning. They came back right in line, but unemployment claims have risen above the 205,000 that they were anticipated at a 211,000. When we're thinking about the Fed fund futures, this is the December meeting. It's a little bit hard to see this here, but when we're thinking about the Fed fund futures and we're thinking about what expectations are moving into the future, this is the December meeting of 2026. And you can see that there were spikes here. The perception of rate hikes were peaking around the end of March. Think about where the end of March was. We were at our profit targets. We were at our lows of the year. Rate hike expectations have risen right back up to those levels that we were at when on the indices, when we were down here at profit targets for the December meeting. What's really amazing about the moment that we're in right now is that Warsh was just approved to be the next Fed chair. Trump has now gotten his Fed chair pick in, and the data that is coming out, essentially confirming the next Fed chair, who is, in theory, and this was very public, that he was saying all the right things when he was in the running to become the Fed chair, but his record is a hawk. And now the data that we're coming in with, right as Powell is leaving office, and on June 16th will be Warsh's very first Fed meeting. He's even said in his testimony that he wants a good family fight, inside of the Federal Reserve. This is not a Federal Reserve where you have unanimous decisions anymore. And Powell's staying on. Trump wanting rate cuts is even less likely now, I believe, than it was when Powell was the Fed chair. I'm going to repeat that again. Rate cuts with Warsh are even less likely than they would have been with Powell as the Fed chair. And so that is not being priced into the market right now. Rate hikes are starting to come out inside of the Fed fund futures as far as being priced into the future. And when we're thinking about that, and in terms of our extension long levels, and in terms of how the markets continue this rally, we're going to have to be very, very diligent about paying attention to leading indicators, because the dollar is making new highs of the week right now. And there's a deep negative correlation. The bank chart is making new lows of the week. The financials are falling. We're going into what our regime tracker is tracking as an inflationary bust. And the only thing that's holding the market up right now is this little VIX, which I should add, this little VIX resistance level. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.